Well, we've got in the midst of the earnings season pretty thick and fast. This morning, of course, we were reacting to MCX earnings as well. We have it as the MD and CEO Mrugank Paranjape joining in right now. Morning, Mr. Paranjape. Thanks for joining in. Mr. Paranjape, it's been a fairly quiet quarter for you this time around. Can you tell me what's the sort of reason for a sharp decline in your earnings in the December quarter?
So, if you look at the results for this quarter, I think the operating revenue has come in line with the ADT, and which in our case is not a surprise in any ways. It is something which is known over the quarter as it builds out. It is about 9% down on the operating revenue, in line with the ADT. On the other hand, as we have continuously been able to contain our cost base, and we are confident that the non-variable costs, which are not linked to revenues, would remain flat to last year's number. I think the place where there is a big delta to last quarter and decrease is really in our mutual fund portfolio. Again, to all the people who've been tracking the markets, the steep increase in bond yields, which has created a big disparity between how the yield curve has moved, has caused losses in the mark-to-market, and that has resulted in a much lower treasury income for this quarter as compared to last quarter. So that decrease in income is not unexpected. It is in line with what is happening. It is in line with what is happening to a lot of the banking entities as well. But it is again something where we, as a prudent manager of our portfolio, are continuously making efforts to see how we can move away from instruments which have too much of a variance in terms of mark to market, but at the same time ensuring that in doing so we do not incur too much tax expenses. So this is something which we will do over time, but make sure again that our portfolio, especially the treasury one, has minimal mark-to-market impact.
So Paranjape, the average daily turnover in commodity futures has decreased by about 3.7%. Do you see this recovering in the last quarter, or is it expected to see a sharp decline like we saw in the previous one?
As we saw, just very recently, even in the last 10 days, ADT in January has already picked up. Now, one thing which we should all remember is that the third quarter of the year, the last quarter in the calendar year, has always traditionally been lower than the previous quarter, and therefore this is no exception. In fact, we've seen some good trends, especially in the base metals, where we have a uptick as compared to Q2. So again, trends have remained similar to the previous years. At the same time, we are already seeing some good signs in the month of January, not just in bullion, but also in our underlying options contract as well.
So Paranjape, what is the sort of traction we're seeing in the gold options that were recently launched, and also what is the contribution of the same, the target contribution that you have internally set?
So let's just put this to rest. We do not have any charges yet that we levy for the options contract, and there is no immediate plan to do so. So we had always maintained that once options gets a good traction and we develop a good portfolio, that's when we will look to charging for this, and therefore it will become a revenue stream for us in the next financial year. In terms of traction, very happy to state that the first development or maturity of the options contract which happened went through absolutely smoothly. This was a new contract. The design was different. There was a development into the futures. There was a incremental margin which the option buyers had to pay in the last 2 days of the development, all of which the market has accepted very well, and all of which has gone through without any glitches. So to us, it's been a very, very smooth rollout. In terms of the volumes, yes, we have said this from day one that we are looking at a number closer to 20% of the underlying in the first 6 months that we think any good options contract should generate, and that's the number that we are targeting and wanting to move towards.
Mr. Paranjape, also can you update us with the number of institutional funds and hedge funds which have signed up for trading in commodities in the gold option space?
So I think on the AIFs, which is the only category of funds which is allowed to participate in commodity derivatives, there is at this point of time only one AIF which is active. The key issue that we understand from the industry is that custodians, who are an integral part of the institutional segment, do not have the clarity and need certain changes to their regulations before they can support institutional participation in the commodity derivatives market. So that is something which, along with the changes that are happening to mutual fund and PMS regulations, we believe SEBI will take care of, and that should pave the way for broader institutional participation going forward.
So Paranjape, also reports suggested NCDX is seeking SEBI nod for nickel aluminium options and is also keen on options in more agri-commodities. What are the commodities in which you're sort of looking to start and foray into?
So I don't know about what you mentioned about NCDX, because I think to launch a options contract you need to have the requisite amount of liquidity in the underlying futures. So I'm not too sure when you talk of nickel and aluminum options, if that is the correct information. Maybe they're looking at different types of contract in the futures segment. However, coming to our plan, we are had the discussion at the board and we have the approval now to approach SEBI for incremental option launches, and we will be approaching SEBI for at least 4 commodities, which is basically crude, zinc, copper and silver, where we would want to launch an options contract.
So Paranjape, also a word around the current market share trends on a quarterly basis?
So I think our market share has hardly changed. We are still in the range of close to 90%. It may have gone down by about 0.5% between the 2 quarters, but that's the only change in terms of market share. Nothing significant at all.
Also, very lastly, what was the volume and value-wise trends across top 6 commodities?
So I think in the last quarter we saw a very healthy growth in the metal segment, reflecting the underlying volatility as well as the price movement that we've been seeing in metals. Crude was a little subdued, volatility was low, but it is picking back. Natural gas had some very good December month, which is expected given the winter season uptick that you see in natural gas. Most importantly, from our perspective, bullion was the one which really played the real role in terms of volumes going down between the 2 quarters. That segment has been a bit subdued. We've all seen that gold volatility is amongst its lowest in the last 6 to 7 years. That has contributed to this decrease in turnover. But we are very confident of this numbers coming back. As I already said, first 10 days of January has seen the numbers pick up very quickly.
Right. Also, that was Mr. Paranjape. Thanks, Atan. Good talking to you this morning. It'll be interesting to see how the stock responds to those earnings in early trade. It potentially could see a further selling after yesterday's big fall of nearly 4%. I wouldn't rule out a further sort of cut on the counter in early trade. Well, Piyush, before we go into the other, why don't we start with the other big earnings that we'll be reacting to today? A whole bunch of mid-cap earnings as well that came in yesterday.
Right. Again, let's start first with the agrotech food.